Okay, so today we are diving deep into Moderna. And honestly, this is a massive one.
Yeah, there is just a ton to unpack here.
There really is. We've pulled a huge stack of recent sources for you. We're looking at their H1 2026 financial filings, a bunch of it, technical market analysis, analyst reports, and of course those major news updates that just hit in August 2026.
Right, which completely changed the conversation around the stock.
Exactly. So our mission today is to really unpack this rapid, highly compressed transformation happening at the company. The core question we want to answer for you is this. Is Moderna actually making the leap from, a single product COVID vaccine company to a fully diversified, multi-pillar mRNA powerhouse?
Or, and this is the big fear,
Yeah.
is the market just getting dangerously ahead of itself?
Right. To put this in perspective, think about the music industry. So a band comes out of nowhere, right?
Yeah,
They drop this historic, world-shaking #1 hit.
the COVID vaccine.
Exactly. Suddenly they are everywhere. It's inescapable. But eventually, the tour ends. The radio stops playing that one song every 5 minutes. And everyone starts asking the exact same, frankly brutal question.
Are they a one-hit wonder?
Yes. Or are they this revolutionary new record label capable of churning out hits on demand?
And that second album is always the hardest. I mean, the pressure to follow up a global phenomenon is immense. And let's be honest, the critics are usually just waiting for you to fail.
Oh, 100%.
That is the exact narrative friction surrounding Moderna right now.
And whether you are an investor watching your portfolio, or maybe a science nerd fascinated by genetics, or just someone curious about the future of medicine, understanding how a company tries to prove its core technology works across entirely different diseases, it's just a fascinating case study in both biology and business.
It really is.
So let's jump right into the science that triggered this whole conversation.
Yeah, we have to start with the 1-2 punch of scientific data that hit the market in August 2026.
We are talking about two massive announcements within days of each other. So first, the FDA approved Emaflusiva.
Right, their mRNA 1010 seasonal flu vaccine.
Exactly. Which officially establishes a second commercial respiratory pillar right alongside their COVID shot, Spikevax. And getting a second product across the FDA finish line is notoriously difficult. But, that wasn't even the biggest news.
No, not by a long shot.
Yeah.
Because just days earlier, on August 19th, positive phase 3 data dropped for intrinsic.
Which is their mRNA 4157 compound, right?
Yes. And this is for melanoma. We are talking about treating cancer here.
Okay, let's pause there and actually explain the mechanism for a second, because this is where the biology gets totally wild.
It's incredible, yeah.
Like, we all know how a traditional vaccine works. You introduce a dead or weakened virus to teach the immune system to fight it. But how does an mRNA cancer therapy actually work?
Well, this is where we need to introduce the concept of mRNA as software.
Yeah.
Think of a traditional pharmaceutical as hardware. You spend billions of dollars building a physical chemical structure like a pill to fix one specific problem.
Right, like a wrench for a specific bolt.
Exactly. But mRNA is completely different. It is literally just genetic code. The lipid nanoparticle, the little fat bubble that delivers the drug into your body, that's like a blank USB drive.
Oh, interesting.
And the mRNA inside. That is the software.
So wait, you just write new code for a new disease and put it on the exact same USB drive?
Essentially, yes. So with intismeran, it's what's called an individualized neoantigen therapy, or an INT. They actually take a sample of a patient's specific melanoma tumor.
Like a biopsy.
Right. They sequence its DNA to find the unique mutations,
Yeah.
the neoantigens, that are driving that one specific person's cancer.
Wow.
Then they sit down and write custom mRNA code with instructions on how to target those exact mutations. They put that custom code onto the USB drive, inject it into the patient, and the patient's own cells read the code and teach the immune system to hunt down the cancer.
That is mind-blowing. It's completely bespoke medicine.
It is, and that explains the explosive market reaction we saw. Because think about it. If Moderna can prove their software works for a relatively simple respiratory virus like the flu,
Right.
and it works for complex, highly mutated oncology like melanoma, the theoretical ceiling for the whole company completely changes.
Because it suggests the underlying operating system is infinitely repeatable.
Exactly.
I hear that, but I have to push back on the business side of this.
Sure, let's hear it.
A flu shot is great, but hasn't the demand for COVID vaccines been absolutely plummeting for years now? Even with this new operating system, can a seasonal flu vaccine really replace the pandemic-level revenue they were pulling in back during, 2021 and 2022?
So in a strict near-term dollar-for-dollar sense, no. A seasonal flu vaccine doesn't instantly replace peak pandemic revenue.
Right, that was a once-in-a-century event.
Exactly. But the market isn't just looking at the total dollar amount. They are looking at the quality and the predictability of that revenue. Flu vaccines represent a recurring, annual, predictable market. It gives them a baseline of stability.
Okay, but stability alone doesn't justify the insane hype we are seeing right now.
No, it doesn't. Which brings us back to oncology. Cancer treatments exist in an entirely different financial universe than preventive vaccines.
Because preventive vaccines are given to healthy people, right?
Exactly. The margins are lower, the pricing is heavily scrutinized by governments, and the volume just has to be massive to make real money. Oncology therapies, especially these individualized ones, carry an exceptionally high financial value per patient.
Because the unmet medical need is just desperate.
Right. The pricing power is completely different.
So basically, they've proven the engine works on a reliable commuter car with the flu vaccine, and now they are showing data that the exact same engine can power a Formula One car in oncology.
I'd go even further. They are proving they aren't a car company at all. They are an engine manufacturer.
I love that. Okay, so they've proven the science works in both respiratory and oncology, but proving a cancer drug works in a tightly controlled clinical trial and actually manufacturing it for the global market, those are two entirely different beasts.
Completely different.
And bridging that gap requires an astronomical amount of capital, which is exactly where Moderna's current friction point lies. Let's dig into that.
Yeah, the financials are where the narrative gets significantly heavier. I mean, running Phase 3 global oncology trials while simultaneously building out a massive commercial sales force for a new flu vaccine. That requires burning through a mountain of cash.
So let's translate the numbers from their H1 2026 filings for you because they paint a very conflicted picture.
They really do.
On the positive side, revenue for the first half of the year was $534 million. And that is more than double the $250 million they made in the first half of 2025.
Right, a solid jump.
And in Q2 specifically, revenue hit $145 million, which actually beat management's own guidance despite the continuing drop in COVID demand.
We also saw an improvement in their operating cash outflow. It came in at negative $1.156 billion for the first half of the year.
Wait, hold on. You're saying they lost over $1 billion in just 6 months, and that is an improvement. Help me make sense of how burning $1 billion is a positive trend.
I know. It sounds totally counterintuitive.
Yeah.
But in the biotech sector, it's all about the trajectory of the burn rate.
Okay.
So in the exact same 6-month period the year prior, their operating cash outflow was negative $1.956 billion.
Oh, wow.
Yeah. So they effectively cut their losses by $800 million. That demonstrates to Wall Street that management is exercising cost discipline and streamlining operations. Burning $1 billion is terrible, sure, but burning $2 billion is fatal.
Okay, I see the logic, but I mean, the reality is still incredibly bleak when you look at the wider lens.
It's tough, yes.
Their trailing 12-month revenue growth, which takes the last 4 quarters and smooths out seasonal bumps, is still sitting at negative 27.62%. The company remains deeply unprofitable.
Yeah, that H1 2026 net loss actually widened to $2.125 billion.
And the immediate casualty of those losses is the balance sheet, right? Their cash and cash equivalents dropped by roughly $872 million in just 6 months.
Leaving them with $1.723 billion in pure cash at the end of June 2026.
Now, management targets ending the year with $4.7 to $5.2 billion in total cash and investments.
But a target is just a target. The reality is their financial runway is getting shorter by the day. And this introduces a massive risk for anyone holding the stock, which is dilutive financing.
Dilution is the boogeyman for retail investors.
Absolutely.
Let's break that down. If a company runs out of cash before their new products become profitable, they can't just close up shop, right? They have to raise money. And often they do that by issuing millions of brand new shares of stock and selling them to the public.
Right. Think of the company's total value as a pizza. If you own a slice and suddenly the company cuts the exact same pizza into twice as many slices to sell to new people, your individual slice just got much smaller.
Your ownership is diluted. And to make matters worse, their underlying software isn't flawless. The sources note that a norovirus vaccine program they were running, MRNA 1403, recently missed its early success criteria. The readouts are delayed.
Yeah, it's a vital reminder that biological execution risk is very real. Just because the code works for melanoma doesn't mean every single program they run is going to be a blockbuster.
So we have this massive contradiction here. We've got brilliant, validated science on one hand, and a balance sheet that is bleeding billions on the other, just racing against a ticking clock. How is Wall Street digesting this tension?
Honestly, by completely ignoring the balance sheet and aggressively pricing in the absolute best-case scientific scenario. I mean, the market reaction in August has been parabolic.
The stock's run is staggering. We are looking at a 52-week return of 395.8%. It bounced from a low of $22.28 all the way up to $137.25.
And the 5-day return surrounding that August news, 110.5%.
It doubled in less than a week.
It did. And when you look at the technical market analysis, the indicators are screaming that the stock is running dangerously hot right now. Just look at the RSI, the Relative Strength Index.
Right. And for those unfamiliar, RSI is essentially a speedometer for a stock's momentum, and it's measured on a scale from 0 to 100.
Right. And anything over 70 generally indicates overbought conditions, meaning the buyers are exhausted and the stock is running on fumes. Moderna's RSI is sitting at 73.01.
That's high.
Furthermore, the stock is completely detached from its moving averages. The moving average is just the average price of the stock over the last 20, 50, or 200 days.
It's like an anchor to historical reality.
And Moderna is trading wildly above its 200-day moving average. In plain English, the long-term, slow and steady investors have been completely overrun by a massive wave of immediate hype.
It is trading well above major analyst price targets, too. I mean, Goldman Sachs raised their target to $120. Citigroup is sitting at a $60 target. And yet the stock is just floating up near 137.
Which perfectly sets up the most fascinating piece of data in this entire deep dive.
Oh, this is my favorite part. We have the market losing its mind, retail investors are buying in at a huge premium, and Wall Street is placing a massive bet on this MRNA platform. But then you look at the people who actually run the company, the insiders, the executives.
Yeah, the insider activity is the ultimate paradox here.
According to the filings, during this massive rally, there have been exactly 0 open market purchases by insiders. Nobody in the C-suite is buying shares. But there have been 6 open market sales totaling over 550,000 shares.
The managerial sentiment proportion ratio is sitting at a highly negative, negative 24.93.
It is an incredibly bearish signal for skeptics. I have to ask you to explain this because to a casual observer, it looks terrible.
It does, yeah.
Like if the company just proved they can tackle cancer and validated their entire multi-billion-dollar business model, why aren't the insiders selling 500,000 shares into this rally instead of mortgaging their houses to buy more?
Okay, we have to add some nuance here. Because insider selling doesn't automatically mean the company is a scam or the house is on fire. Executives in biotech receive a massive portion of their compensation in stock, specifically restricted stock units, or RSUs.
Right.
So when those vest, they trigger massive tax bills.
Yeah.
Executives routinely sell shares just to cover the taxes.
And they also use what are called 10b5-1 plans, right?
Yes, exactly. Because executives have non-public material information, like the results of a cancer trial, for instance. They can't just pull out their phone, log into a brokerage app, and sell stock on a Tuesday. They would go to jail for insider trading.
Oh, sure.
So they set up these 10b5-1 plans, which are basically pre-scheduled automated sales set months or even years in advance. They sell a certain number of shares on a certain date, completely regardless of what the price is that day.
Okay, so the selling itself might just be routine corporate housekeeping.
Exactly.
Yeah.
The selling isn't the primary red flag. The red flag is the absolute zero in the buying column. While executives schedule sales, they were allowed to purchase shares during open trading windows. If this August data is truly the most transformative moment in the company's history, you'd expect the people with the deepest visibility into the clinical data and the commercial launch plans to put some of their own fresh capital into the stock.
Right.
The fact that they aren't doing that at these levels suggests they believe the current $137 price tag has already fully priced in all the good news.
It's like a chef coming out to the dining room and telling you the special is the greatest meal they have ever cooked, but you notice they brought their own lunch from home, you know? Like, you might still order the special, but it definitely makes you pause.
That's a great way to put it. It forces you to ask whether the insiders are just acknowledging that the stock has run up incredibly fast, and, well, it is a prudent time to take some chips off the table while retail investors are buying the hype.
So, with the stock running white hot, insiders declining to buy, and the company burning $1 billion every 6 months, the next 12 to 24 months are clearly make or break. Let's map this out for the listener. What does the ultimate success story look like, and what are the catastrophic failure points?
Let's start with the blue sky scenario. This is the 2 to 5 year optimistic path the market is clearly trying to price in right now. Step 1. MFL-UCIVA actually gains major commercial penetration this winter.
Okay.
It goes from being a science experiment approved by the FDA to a drug that doctors actually prescribe and pharmacies actually stock.
Which creates that recurring seasonal revenue stream, stopping the financial bleeding.
Exactly. Then, step 2. The intismeran data in melanoma holds up in broader, larger population trials. They successfully navigate the grueling regulatory pathway and secure FDA approval.
And suddenly you have a high-margin, high-value oncology franchise.
Right. And financially, that means overall revenue turns positive on a trailing 12-month basis. The operating cash burn continues to narrow until they cross the threshold into cash flow break-even.
So they fund their own existence without needing to dilute shareholders by issuing more stock.
Yes. And we should also mention broader macroeconomic factors here.
Oh, like the sector as a whole.
Exactly. The sources point out that the biotech sector is enjoying strong tailwinds right now. The XBI ETF, which tracks the broader biotech sector, is up 34% since March of 2026.
And a rising tide lifts all boats.
Right. A hot sector could easily lead to lucrative, non-dilutive partnerships with larger pharmaceutical companies.
Okay, so if all of that happens, Moderna completes the narrative shift. They are no longer a pandemic one-hit wonder. They are a foundational, diversified mRNA platform company. But what are the thesis breakers? What actually pops the balloon?
It all comes down to execution. The first major risk is just a commercial flop for the new flu vaccine. If they have the approval but simply cannot convince doctors to switch from established competitors,
Like Sanofi or GSK?
right, if they can't capture market share, the whole multi-product thesis collapses. It proves they have a sales problem, not a science problem.
Got it. Second thesis breaker.
A negative safety signal or waning efficacy in subsequent oncology trials. The phase 3 melanoma data is fantastic today, but if follow-up studies over the next year show severe side effects or prove that the cancer returns.
That massive valuation premium the stock is enjoying evaporates overnight.
Exactly. And the third risk is just simple math, the cash balances. If their cash reserves fall below that 4.7 to 5.2 billion projection, Wall Street will panic.
Because it means they will likely be forced into that dilutive financing we talked about earlier, shrinking everyone's slice of the pie.
Yep. Re-rating from a declining vaccine maker to a diversified platform requires absolutely flawless execution.
So what does this all mean for you, the listener tracking this right now? Like, what is the single most important confirmation signal to be watching?
It is entirely immediate. It is the upcoming flu season.
Really? Just the flu season?
Yeah. We have seen the science work in a controlled, pristine clinical trial. Now we need to see if Moderna's commercial division can actually compete in the brutal reality of the open pharmaceutical market against entrenched giants.
Right. If MFL-Asiva struggles to gain market share this winter, the market is going to aggressively rethink that 110% 5-day rally.
It is the ultimate reality check.
It absolutely is. So let's bring this all together. Moderna is undeniably sitting at a genuine inflection point. The science has taken a massive leap forward.
Huge leap.
They have a brand new respiratory win with the flu vaccine and a massive oncology validation with the melanoma data. The platform, the underlying software, it appears to be very real.
But the tension lies in the fact that the market might be pricing in a flawless, unobstructed victory,
Right.
while the company is still bleeding billions of dollars in cash, and insiders are quietly declining to buy the rally.
It is a real-time, high-stakes lesson in how markets value the promise of a revolutionary new technology versus the cold, hard reality of a current balance sheet. I mean, the stock price today is a reflection of tomorrow's hopes, not today's cash flow.
It is a textbook example of future optionality colliding with present-day fundamentals.
And that tension is exactly why we love diving into these companies. But I want to leave you, the listener, with one final, broader thought to just kind of mull over.
Okay, let's hear it.
We've spent a lot of time on the mechanics of vaccines and oncology and the heavy math of cash burn. But let's take a step back and look at the underlying philosophy of mRNA as an operating system.
The implications for the entire healthcare sector.
Exactly. If this technology truly proves to be a repeatable software platform where the manufacturing process and the delivery mechanism stay exactly the same, and you only change the genetic code on the flash drive to treat entirely different diseases, does the traditional pharmaceutical development model become entirely obsolete?
I mean, it would completely upend the economics of drug discovery.
Think about it. We are used to drugs taking decades and billions of dollars of trial and error in chemistry labs. How do you even put a price tag on a company that could theoretically sit at a computer, sequence the DNA of the next emerging global pathogen or a rare localized cancer, and literally code a cure in a matter of weeks?
It's wild to even imagine.
We are watching a band try to prove they aren't a one-hit wonder, but what if they've actually just invented a machine that writes number one hits automatically? They have the second and third singles lined up. Now we just have to wait and see if the world actually buys the album.